Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today I want to answer a question I got on Instagram. Yes, I be on Instagram, and I answer questions on Instagram too, as well as YouTube, TikTok, Twitter, and anywhere else that you may find me here on the social medias. But in either case, the question was, how do I profit from fractional shares? How do they really work? So today I want to take a little bit of time to answer that question, illustrate, maybe draw, get a whiteboard here in a few minutes, and kind of break that down. So for those who are new to investing, if you've never heard of this before, fractional shares are one of my most favorite things ever. I even wrote an article on fractional shares and the power of investing in fractional shares. And what that essentially means is this. Basically, some companies are really expensive. One of my favorite companies is Google. One share of Google as of this recording is $2,165.92. That's a lot of money. Okay, and unless you have that much, you cannot own Google unless you go for fractional shares. And what that means is instead of me investing based on what the share price is today, it allows me as an investor to say, look, just give me a piece of it. Give me a half a share, right? I only got $1,000. I only got $25. I only have $5. Let me buy this company, and if the company is good and we expect the company to continue to grow, then my $5, my $10, my $1,000, whatever it is going to grow with it. And for those that don't understand how profit works in the stock market, that is essentially it, where you buy something for a price, in this case, Google at $21.65. And if we feel, we as the public and the investors, if we feel the value of the company is going up, if we feel the company is going to be more valuable in the future, perhaps they're making more money, getting more customers, things like that, then the value of the shares, the value of the company, the 2165 will rise, and I'm able to sell for that higher value, what we hope to be the higher value. So for example, now I've been investing in Google for a while on public. I do not have a full share. So I'll show this too. This is my current earnings for Google at this point in time, Alphabet to be correct here, but I only have $972 in it. That is zero, I don't have a full share, 0.4492 shares, not a full share, right? And when you average out, because I got it at different times, but if you were to average out like the amount that I put into it, like what was the share price when I got into it, about $19.92. So when I got it, the value was at $19.92. Today, it's at $21.65. That is how the market works, and that is how we would expect the market to work over the long term. Now, honestly, back in 2021, I was up 25-30%. The market has changed, so obviously it's going to that percent that you got it at this price, and the stock is up here now. That can change, and it can obviously go in the opposite direction. And the reason why that happens is because we don't expect a company to do well in the future, and maybe the economy has changed, maybe the company is shrinking, maybe there's higher competition. You can think about Snapchat, we had talked about the other day. You can think about Netflix. You can think about almost any company, both good and bad. But you say, look, I'm entering, this is the price I'm getting it at. Whether it rises or falls is going to depend on what we, the public, expect the company to do in the future. Is your future bright? Is it not? And how you enter that is with fractional shares if you do not have the full share amount. Now, the next question is, does it matter? Does it matter if I have a fractional share or a whole share? Honestly, no, because the percentages are going to be the same. So Google today is up 2.25%. So if I have $2,000, I'm going to get 2% of that, or 2.25% of that. If I only have $200, I still get 2.25% of that. The percentage is always going to be the same. It's just the dollar amount is going to be bigger. Obviously, with percentages, the more money I have in it, the higher payout I get, even though the percentages are the same. So you got $100, you're going to get $2.25. Okay, that's 2.25%. You got $10, you ain't gonna get that much, right? And that's just how the math works out, and that's common. But the key and the benefit of it is I can still invest and grow my money now. I would rather invest $100 and make $2 today, or even $2 a day, versus not being able to do it at all and just sitting here with my $100, my $10, or my $1,000 and do nothing and sit while the market continues to grow and change and do all the things that the market tends to do. So for me, the beauty of fractional shares is that you can invest based on your budget. And that is the most important thing. Because again, 1% on $100 is better than nothing. 1% on $1,000 is better than nothing. And I would rather you choose quality index funds, choose quality companies, and grow your money, even if it is small. Even if it is small, than doing absolutely nothing and allowing time to pass. Because in the last 5 years, Google's up 123%. So if I only invested $200, right, and it continues to grow at that pace, which again, that's no guarantee, but I can make another 246. In 5 years, I can take 200 and more than double it. I would rather double my $200 than do nothing with the $200. If I can double $2,000, if I can double $20,000, obviously I would take it. But it has to start somewhere. And fractional shares are usually the entry point for new investors. And at some point, if I continue investing in Google and I think it continues to be a good company, then I will eventually own one full share. And they're going to do a stock split. We can talk about those later. Stock splits, we've done videos on those, and that will obviously change a lot of the math that we see here. But again, if you're a new investor, we're going to stick to one topic at a time, but do feel free to peruse the channel to learn more about your investing needs and questions that you may have. So that is my explainer on how you can profit using fractional shares, what they mean, how they work, and everything in between. If you have other investing questions that you want me to answer, ask them in the comments below. Y'all know I read the comments, and I take your questions, make great content, and we all learn together. So let me know what you think about fractional shares. If you have any other questions, feel free, again, to put those in the comments. If you want to support the channel, as always, there's a like button, there's a subscribe button. You should use those. Those things are free. So thank you guys for doing that. We are growing. We're on our way to 4,000, trying to shoot for 5,000 before the end of the year. But we are growing, which is great. Feel free to like, subscribe, and do all those YouTubey things. All right, that's it for me. Talk to you later.